So a few changes to the way we think about some of their key assets. I guess the biggest one would be Escondida, which is about 2/3 of their copper business in terms of EBITDA mix. And so obviously the centerpiece of their thrust in copper. You're really going through that and some of the extra clarity they've provided when you get beyond the medium-term guidance that they've got is for much lower production than what we or consensus had previously thought. So essentially copper production falling from a range of 1.2 to 1.3 million tonnes per year down to about 900,000 to 1 million tonnes per year for the period after the medium term. Now, the reason I say the period after medium term instead of just the long term is because they're still hoping that they can deploy new leaching technology and a possible additional concentrator to lift their throughput and get volumes back above 1 million tonnes per annum. Now, we don't have that in our numbers anymore. We've stripped that out, and that's taken a bit of a hit to our copper numbers. Where some of those losses were offset came through in terms of its unit cost performance across some of its other copper assets. So Pampa Norte, Antamina, and Olympic Dam, the latter benefiting from their combined Oz Minerals acquisition. Each of them performing a bit better than what we were expecting in terms of unit costs. So carrying that forward, where previously I had just given it benefit for this half, does offset some of the losses from Escondida in the long term. So all in all, a 3% change to how we think about copper. So that doesn't really move the needle. What can move the needle for copper for BHP is definitely how that South Australian business takes shape. So Oak Dam, which is a discovery they've made several years ago, every now and again they mention it without any hard numbers. They've said that they're starting to get really encouraging drill results and hitting some really solid intercepts. So later this year, they'll come out with their maiden resource, and they're starting to talk about it more like the centerpiece of an integrated South Australian copper system. So that's certainly very encouraging versus where we were a few years ago. They're also now talking about Olympic Dam deeps. The even potential for something like a huge block cave eventually, depending on how the engineering works with the current open pit. But that's another growth upside opportunity that's not in our consensus numbers. And then you've got things like Carrapateena, which they picked up from Oz Minerals. That also, the stage 2 of that is a block cave that runs 2 kilometres deep. So all of these are things that aren't in consensus or our numbers that could really add some meaningful copper growth outside of Escondida. So very happy with the potential there, but we just haven't yet given it credit in our valuation. What was the primary focus on the earnings in the earnings call, the market call, was certainly nickel and Nickel West, something that we've talked about with South 32, and Brownie's done some great coverage on Indonesian supply in the market. They're definitely pushing through the hard to downgrades their numbers and how they think about nickel. Pretty much the impression I got from the call was that without government intervention in the form of support or subsidised tax treatment, some sort of benefit to the economics of Nickel West, they're planning to shelve or suspend the rest of the Nickel West operations and put them in care and maintenance. So that would actually be beneficial to our near-term earnings because we have Nickel West in loss-making territory now for a period of 4 years, where previously it was for the next 18 months. But certainly not enough to really move or impact our numbers. So it was it might have been a big focus on the call, but certainly not enough to really change how we think about BHP. What wasn't really talked about in BHP's result call was definitely iron ore and the strong performance there. That they keep reasserting themselves with their cost defence, driving productivity and efficiency gains to defend against consistently strong inflation. Anyone in WA will tell you the cost environment there is just impossible at the moment, but they continue to deliver debottlenecking and incremental reserve replacement projects to offset some of the other input increases we're seeing from inflation. So, they're by far the lowest cost producer in iron ore. But, certainly very happy with iron ore driving over 60% of group EBITDA. So all of it boils down to a pretty healthy dividend, 72 cents. We were expecting a bit stronger at 75. Consensus had collapsed in recent weeks to 69, so a little bit better than consensus, and certainly supports a good yield around 5% annualized. So, the share price has been weakening quite markedly. Some advisors have been mentioning it to me. When do we get on board? I would say this result doesn't overall change my long-term view on BHP or what to do with the stock. I think that I'm hoping that we hit some volatility, short-term in things like iron ore post the China New Year. Often steel mills and traders will extrapolate early trends post China New Year and destock or restock depending on extrapolating those trends. So at the moment, it looks like it's destocking, and we're seeing some extra tons being released into the market, and that iron ore price coming back to 120, as Giggsy touched on at the start of the meeting. So if that keeps falling towards 100, I think there's cost support once you get into the 90s. So I think the spot price, if it does hit that volatility, you could probably pick up BHP between 42 to 43, which is where I become a buyer. So in the meantime, in the absence of that volatility, I think it's probably fairly priced, with the market obviously putting a premium on solid fundamentals in a pretty difficult global economy.